Hello everyone, this is Red with RedDragonLeo.com, and just wanted to do a quick update here for today, Tuesday, and it is the 26th of June. I still think we're on for the 29th being a ritual 11 day, and that we will drop hard on the 29th. I still think that's possible. But I did want to look at the charts right here. First we're going to look at the ES, which is, of course, the futures. And I'm looking at the 2-hour chart here just to give a good reference. And you can clearly see here a 5-wave pattern down. So if I take my little pen here and draw for you again, we should clearly see you had basically here a wave 1 down with this choppy Fed. I don't know if you know, that was a low, obviously. And then you had some chop sideways for a wave 2. You had a nice wave 3 down, you had a wave 4 up, and you had a wave 5 down. This whole pattern right here, of course, is nothing but a larger wave 1 down. Okay? I think I was calling that a major wave 1. It does not matter, folks. It's not even important. It just, we know it goes in waves. Okay, looking at this, it appears that we've put in a bottom. I've noticed that we're getting some positive divergence here on the histogram bars, I'm sorry, the MACD lines right here. We're down here at negative 7.5, so it stands to reason that we should go up here a little bit more. Now, based on the fact that the daily chart is just now rolling over, I would suspect that we're going to probably get up here to 0, maybe a little bit above. But as you can see, each time we went down just a hair, down lower and lower. This was over the last few days as the weekly and daily. As the market was going up, these here histogram or MACDs were actually putting in lower highs, lower highs, lower highs. So it's reasonable to expect it to not go past probably about 2.5 on this move back up. That's just what I'm expecting. Now, you'll notice that down here we had a very nice low of negative 10. And then also back here we had a low of negative 10 as well in that area. So it you know, it stands to reason that we are going to probably go up for a few more days. So this could dip down a little bit and then curl back up, and that might mean that we actually go put in a few bars like this, go negative again, and then go back positive over the next few days. So what I would kind of expect is possibly a little bit of a rally, maybe to there to hit that line of resistance, maybe drop down a little bit tomorrow in the morning or something, and then pop back up for a C wave. So the whole pattern here should end up being an A and then some type of B down, maybe to put in a double bottom right there or something, or fall a little short of it, and then push up for a C wave. I don't really know where the C wave is going to go, but that whole pattern, I think, is going to make a major wave 2 up, and then it's going to set us up for a wave 3 down on Friday, the 29th. And this is just, again, I'm saying this again because the 29th is a ritual day, and I'll go over that again for you. But basically, you have 0 plus 6 because it's a 6-month, okay, plus 2 plus 9, that's the 29th day, plus 2 for the 2000 and the 2012, then the 0, and then the 1, and then the 2 to make the 12. That all equals 22. 22 is a master number because it's divisible by 11. So therefore it is an 11 date. And since it encompasses all the dates, the month, the day, and the year, it is a yearly one. That's just my terminology. I don't know what the Illuminati actually call it, but it's a yearly one. If it was only, for example, if you only added up the two, the daily part, the 2 and the 9 to make 11, and you just did just that portion, then that would obviously be a daily one. If you wanted to do the month and the day, and if somehow you add that up and it came up to an 11, then you could call that a monthly one if you wanted to go that far. But so what I'm looking for here is Tuesday, and that's today, and Wednesday and Thursday is for them to chop this up for this C wave, put in our high probably on Thursday or even Friday morning, and then that would be it, and then we'll go down. So let's look at the let's see. Let's look at the SPX to see how it factors into this. But first, before we do that, let's also do the 4-hour chart to see if it also looks similar. The reason I look at these 4-hour charts and the 2-hour charts is obvious, is because they tend to hold more weight for multi-day moves. And you can see down here, obviously, down here at the bottom right here, again on this, we did not go quite as low here as we did here. And that's a strong indication that we are just now starting to move down. And on the 4-hour chart, as you can see, it's -5. It has not put in a positive divergence yet on the 4-hour. So there is a possibility still that they could roll this over and maybe roll it over and put in a little bit slightly higher there. And then maybe put in the positive divergence there. They could do that maybe tomorrow or maybe into the close today. They run back down here. It's a possibility. I'm thinking they're going to hit this. Is what I'm thinking. That's where they're going to hit this trend line right here. I think that's where they're going to hit, and then they will stop basically there. Then tomorrow I think they'll gap up above it, then come back for the back test of it. And that's the way they typically do if you draw the line on out. So you gap up above it, come back for the back test, and that would obviously push this up, and then it would roll over, but still put in a higher high than this one here. And so it makes a positive divergence. And that allows for the C wave up into Friday. So if that makes sense to you, hopefully it does. So that means, you know, this could go like this, and then like this, and then like this, and then it goes back up. So it's going to be, you know, hard to read it. You're not going to see a lot there, I don't think. So again, it still looks like for some type of wave 1 down, there's 5 waves you can still see, and then some type of 2 wave up and some type of 3. And I'm just calling them major 1, 2, and 3. And these smaller ones in between here, call them minors or something like that. So that's it for that chart. Let's look at the SPX and see how well it's lined up. And lo and behold, the 2-hour chart is clearly curling back up. As you can see on the SPX, it is also right now in alignment with the ES. And remember, the ES trades more hours because it trades pre-market and aftermarket than the SPX. But the SPX obviously is looking like it wants to curl up. So what I expect it to do is probably to go positive and then to dip back negative. So on a strong push up, you could easily see it gap up. Now, I haven't drawn a trend line here because there is none for this one down to connect anything in there, so you really don't know where it could gap to. I don't see any obvious trend lines other than maybe if I drew one from here to here, that might connect to there. Let's do that. Let me take this off of here and just look at this again, and let's draw a trend line. Where was I at? Oh, here. Sorry. So if I draw a trend line like this is a possibility. Look at how that kind of lines up with the bottom there. So it's kind of lining up with the bottom there and the top there, the top there, and the top there. That could be quite obvious, but obviously that is some resistance. So if I go back here and again draw this, I would suspect it to gap up above this tomorrow. Maybe just close about flat or down a little bit today, somewhere in that range, but then gap up, come back down for the B wave, and then run up for the C wave. And I'm not sure where it's going to go. Possibly this line. I don't even know where that line goes to. But obviously, as you can see, it wants to curl up here. So you'd think that it would push up, then probably drop back down like this, put in some of these bars, and then run up. So that would be like this, kind of like this is what you'd expect. And this is common. And then you'd see it go up here again before it rolls over. I don't know how high this one's going to go, but I would expect it to put some positive ones. And then roll back down. And for a nice a lower one. If everything goes well, then this next move down should go deeper than this right here on the daily chart. So let's look at the daily chart. So you can see here again, same scenario. Wave 1 down for that Fed meeting, a wave 2 up, a wave 3, a wave 4, a wave 5. That's all inside of a larger wave 1. And remember, I am making these Elliott wave patterns work with what I see here in the technical analysis of all the different charts. I'm showing you the 2-hour right now, but I'm going to also go to the daily. We can do the 4-hour as well, and you're going to see something similar on the 4-hour. So you got to look at all the different time frames, and you can clearly see the 4-hour still's got more room to go down. So it needs to curl back up. I think it will. And this is why I think there's more down to go, why there's a wave 3. Because basically, if you look at it like this, you would expect it to probably put in some type of little bit higher bar, maybe in this range like this, and then one like this, and then dip back down. Okay, I don't expect it to really go positive. So I'd kind of expect it to curl up a little, kind of flat, and then roll over and keep on going down. This would allow for this again to jump up, back down, and then run up, and for the ABC. And then it would roll back down, as you can see. And I think we're going to see the same thing on the daily chart. If we look at the daily chart right here, and let's just zoom in here just on this section right here. Okay, as you can clearly see, the daily tends to do that too. You see it's rolled down, and so what you would kind of expect it to do is probably curl up, kind of go flat, maybe roll over like this. So you have a high there and a little bit lower one right here as it curls and runs back up to allow for the wave 2 up, assuming this is again a wave 1. Then you have your wave 2, and I don't know how high it's going to go, just depends. And then you have a nice wave 3 down. And I think that, again, is a situation we're going to hit. As it rolls down, then it should go down pretty deeply. Now, how deep is it going to go? That depends upon the weekly chart, obviously, so we need to take a look at the weekly. You can see that they put in positive divergence here, as it was negative 20 and it was negative 15. So you knew that when this third wave ended and this fourth wave ended, the fifth wave that was shortened, it's more like a wave 1, and you knew when it put in this higher low here on the MACDs, you kind of knew that was probably the end, especially with this spinning top pattern. Then we had the rally up, but we did have an A, a B, a C, just like that. So let's look at the weekly chart, and we go to 5 years, boom. And on the weekly chart, it's exactly what I'm expecting in the daily, as you can clearly see what you're seeing right here. Again, the weekly is coming up here, kind of going flat and kind of, wanting to getting ready to roll over like this and go deeper. And this kind of allows for the ABC move, and then it should roll over and go deeper. It did the exact same thing right here, as you can see, and look what happened afterwards. Boom. Now, I'm not saying that's going to happen this go around. I'm not sure, but I can clearly count here a wave 1 down, a wave 2, a wave 3, a wave 4 for this white candle, and a wave 5. The same exact thing. Here I count a wave 1 here, a wave, let's see, is that going to be a wave 1? No, I think it's actually, I think we've already got our ABC. Okay, let me go back here again. Okay, I think it goes like this. The wave 1 was there, and then down for that lower peak for the B wave, and then up for the C wave. Now, if I'm wrong on that, then of course we would start our C wave down soon. Now, obviously, if I am wrong on that, then and it doesn't quite go like that, then it could very well turn and go back up, being that possibly this whole move is an A, a B, and we do have a C up to 1380. Don't feel like that's a situation right now, but we'll take it day by day. Right now, I'm just expecting a sell-off on Friday. Okay, That's it. I'm running out of time. Thanks, guys.